Accenture provides consulting and managed services worldwide. Company's stock price has been trading at 5-year lows just recently. Is Accenture deserving of such beating in the markets, or it's an opportunity for investors to reach into their pockets? Let's look closer at the business. Accenture is the dominant force among consulting companies. Not only does it work with the most widely known USA brands, but it generates significant revenue from countries outside of United States. Company's revenue in the past 12 months has reached close to $71 billion. As you can see, it has been trending up over the past 10 years with especially strong growth in post-pandemic years when clients invested heavily in digital transformation. Since then, revenue growth flattened, and this is one of the major worries of the market and the reason why Accenture's stock price is under pressure. Company generates solid profit. In the recent 12 months, net profit was around 7.6 billion with a margin of 10.8%. This year, net profit margin was under pressure because company was optimizing its operations and did let go some of its employees, to whom the company had to cover severance costs. Free cash flow during the same period reached $11.5 billion, with a margin of 16.3%, which is on the higher side. Typical Accenture's free cash flow margin is around 14%. To sum it up, Accenture's consulting and managed services business is profitable and stable. Recently, the revenue growth has slowed down and profitability margins contracted slightly. Accenture operates on an asset-light business model, where most of its expenses come from employing people who provide services to company's clients. This means that free cash flow is resilient even at times when revenue is not. Accenture generates so much cash that it cannot employ it, so it does only a few things with it. Accenture makes acquisitions on quarterly basis. Most of the time those acquisitions consist of many small ones, then a few large ones. What they usually try to accomplish with the acquisition is hiring a team of experts that can serve their clients. Other uses of free cash flow are dividends and share buybacks. In the past 5 years, 80% of free cash flow was allocated to dividends and share buybacks. And this is, ladies and gentlemen, what we call a cash cow. So if we can expect pretty consistent cash flow margins, then what we are mostly interested in is revenue growth. Let's look at some of the most important KPIs for Accenture and see what are the trends. If we look at revenue growth by segment, we can see that consulting had a big increase from $27 to $34 billion in 2022, post-pandemic time. Since then, revenue in this segment increased by $1 billion in the next 3 years. Managed services did not have any significant jumps in revenue, but grew quite consistently over a 5-year period. And by 2025, managed services bring in almost the same amount of revenue as consulting. During the 5-year period, revenue grew in all industries. However, some did better than others. Communication, media and technology industry, as well as financial services industry, grew fast in 2021 and 2022, but since then the growth rate declined significantly. Other 3 industries experienced more consistent growth in 5-year period, with no years in revenue decline. I did some forecasting scenarios according to these numbers, and over the next 5 years I believe that we can expect around 5% annual revenue growth from Accenture. Based on my calculations, which are quite conservative, Accenture's stock value is around $260 per share. Obviously, we would love to buy into the business with margin of safety, but I doubt that it's very realistic to buy the stock cheaper than $240 per share. If we assume the 5% annual revenue growth in the next 5 years, we can expect around 9% annual returns, with dividends included. On top of that, we can see that stock price was quite volatile over the past 5-year period, so if we buy cheap, we may be able to resell it earlier. Currently, I'm neutral on the stock price, as I believe it's fairly priced. If you have something to add, I would love to see your thoughts in the comment section below. Thank you for watching. If you found this analysis useful and if you're looking for more investment ideas, subscribe to my channel. I'm Aurimas and these were my insights. Stay curious, stay disciplined, and may your returns be strong. Merry Christmas, everybody!